Bring in Chris Conway for more from the Australian Stock Report. He joins us live from our Melbourne studio. Chris, good morning to you. Just on this breaking news with Oz Forex up 31.7% after confirming that Western Union takeover offer. What do you make of this?
Good morning, guys. Look, our long-term analysts actually hold Oz Forex in our long-term portfolio. They're very happy this morning. They haven't actually given me any insight on what they think of the bid. The initial reaction was, though, that it's reasonably fair. And probably will be supported by the board. So, yeah, look, a good result, as you say, due diligence and a few other things to get over the line, but it seems like a pretty fair offer.
Then again, how important is it, or would it be, for this stock to finish above the indicative offer price, which is between $3.50 and $3.70 a share? Yes, it's spiked, but it's still under, even at this level at $3.43, that's still under the indicative offer price, lower end of the range.
Yeah, I don't think that's too much of a worry, Carson. You know, again, it's an initial offer. There's got to be the reaction from the board. It's subject to regulatory approvals, so on and so forth. So I don't think it's surprising to see it currently priced at the lower end of the range. People aren't willing to pay the ultimate premium because there's still some risk factors there, however small. So, yeah, I mean, obviously you'd want to see it close to $3.50, but I don't think a little bit under that is any cause for real concern.
And prospects for a counter bid from the likes of, say, a Travelex or someone else coming in over the top of this?
Again, I haven't got the story from the long-term analysts that I work with, but no, at this stage I don't think there will be a bid. You know, they haven't intimated to me that they expect anything else. They might see a sweetened bid from Western Union, but not perhaps a bid from another player.
All right, what else are you watching on the local market today? Obviously BHP's AGM, which we'll have extensive coverage of throughout the session, but it's up 2%. Your take on this one and whether or not you'd want to buy in, because I know recently you were saying I think you'd buy in at $18.
Yeah, look, exactly right. I think $18 if it trades down there, it's almost an automatic buy. Look, I've heard a lot of pretty aggressive commentary this morning about the progressive dividend policy, words like stupid, ludicrous. I think they're a little bit harsh. The policy was implemented at the top of the cycle when BHP was making mountains and mountains of money. We're obviously now at the bottom of the cycle, and yes, admittedly, it looks a little bit silly. I think if you're of the belief, because of course BHP will be borrowing to pay their dividends, if you're of the belief that BHP doesn't have the ability to earn back and pay back that money, I think then you can label it stupid and then you can label it ludicrous. But I don't think anyone would realistically say that in 5 to 10 years' time BHP is not going to have the capacity to pay back any money they borrow to sustain their progressive dividend policy. So I think that language is a little harsh. I don't think the board yanks it. I think it remains in place. And I also don't think that there'll be any negative reaction to their credit rating. I think, as I said, it's just that we're at the bottom of the cycle. Right now, yes, admittedly, it does look a little bit silly. But I think the media and a few other analysts have just, you know, got on the bandwagon on this one, and I don't think it's. I think it's a bit of a storm in a teacup.
But then, where do you see growth going for BHP going forward, given commodity prices have fallen so heavily? And there's, I mean, are you bullish on commodity prices going forward?
Yeah, well, I'm starting to get more bullish than bearish. Again, I think we're at or close to the bottom of the cycle. In the near term, with BHP specifically, yes, there's the chance that the share price goes lower, hence why I've got to buy at 18, not where it currently sits. But again, I heard another analyst on the program talking to you guys earlier about he's being more bullish on China. I think it was Stein from Saxo. China's not falling off a cliff, perhaps like everyone thinks it is. We are bottoming out in terms of the commodity cycle, and like I said, I think, you know, the risk is to the upside rather than the downside from here.
So with that, you're expecting some support for the Australian dollar? I'm just sort of, when we go stock specific, for instance, you're predicating your call on, say, a Sydney Airport model based on still downward pressure on the Aussie dollar to be triggering, you know, an onward demand story for particularly offshore tourism. Now, on that measure, you know, where do you see it going?
Yeah, so I think into the Fed decision that the US dollar will continue to strengthen and comparatively, of course, the Aussie dollar will depreciate. So these are just trades into the Fed decision. The stocks that you're talking about there, Sydney Airport, Magellan and Aristocrat is the other one that I like. Coming out of the decision, it'll be an assessment after to see what happens, you know, in terms of the Aussie dollar, in terms of the greenback. But yes, I think the greenback, sorry, will continue to appreciate. But that trade, the caveat to that is that trade is already becoming a little bit crowded. You know, the theme that everyone's talking about across analytical circles at the moment is US dollar strength, B-long companies with US dollar earnings. It's hardly a secret. Everyone's doing it. And as we all know, when people pile into a trade on one side, it takes a little wobble at the top and all of a sudden it all comes crashing down. So with those stocks, be mindful, buy into pullbacks, buy into companies still that have strong balance sheets that, tick all the other fundamental and technical boxes. But yes, that is the theme leading, I think, into the December 15-16 Fed decision.
Okay, what else on your watch list, stock-wise?
As I mentioned, Aristocrat, Magellan. Magellan's a really interesting story. They have been positioning for this US dollar strength. They're long, cash-rich tech companies and US banks. And then, of course, they get the translation benefit of bringing those earnings and portfolios back into Australian dollars. So that's one we like. Again, very bullish technically. It's been surging of late. You'd have to buy into it on a pullback. You couldn't just buy it at the top that it's printed recently. On the downside, it's the old gold story, the negative correlation between gold and the US dollar. I think Northern Star is a little bit overcooked. It's had a tremendous rally recently, rallied about 40 or 50%, I think, in 2 or 3 months. It's due a pullback. I think gold prices, now that they've cracked that 1080 support level, will continue to head lower, perhaps into 1050 again on the back of the US dollar strength. So there's a couple of trades there, but let me stress, they are trades. They're not long-term plays. They're into the Fed decision and maybe change of focus coming out. And the other caveat, of course, like I said, is that you've got to be mindful that everyone else is doing this. So be ready to hit the exit button if it changes.
What lesson do you take from the Mesoblast foray stateside on the NASDAQ? The doomed listing.
Yeah, well, it was obviously a horrible result. What were they, down 40% on the day? Don't know. Poorly executed, perhaps. I don't think there's anything wrong with the company. They shot for the stars and they landed nowhere near them. So yeah, just a poor execution probably on that front.
Right, okay. Cold comfort if you have borne the brunt of it, not least of all the founder.
Absolutely.
Thanking you. Appreciate it.
Thanks,
have a good
guys.
week. All right.
Cheers, you too.